All right, well, good morning, active traders. I'm Ken Calhoun from TradeMastery.com and DayTradingUniversity.com. Great to see so many of you here today on our Saturday, and we're getting underway with today's session right now. Now, we've got really good volatility in the market. We had a bullish engulfing down here, and the market's been slowly climbing up. However, I'm not going to be aggressively trading. I day trade aggressively. I'm not going to be swing trading long positions until when? If you want to put this in context. So despite the bounce, what's the broad technical picture in this chart? We're still in a downtrend and we're still in a bear market rally until we get above at least this peak and preferably this one. That would be a long signal, say R1, resistance level 1, above which we do want to start putting on some size, and swing trade longs would be over the 41.20 or so, and especially if we break that 43.20 right above this peak. But obviously we're still in a downtrend. So despite what the talking head bulls may tell you, we're still in a downtrend and the market's very likely. Here's my official call for the stock market forecast for the balance of the year. I expect we will continue to go up for a week, a little bit, 2 weeks at most. I expect a major pullback or major sell-off in the market second and or third weeks of December. And then last week in December, probably a little Santa Claus bounce rally kind of thing. So that's my forecast. Next week, it's going to be slide up and choppy. The week after, and likely starting second week in December, we may well see a major correction, because at that point, we will be at the resistance level in this channel, right? If you draw the channel, ask any Wall Street quant, right? Any professional trader. This is definitely still in a downtrend. Now, buying at the top is what? Is that smart or is that stupid? Do you buy right under resistance or do you sell right under resistance? You sell right under resistance, and you buy in versus it go up at resistance. And yet most people aren't thinking like that, because they listen to the talking heads that are, well, it looks like everything's behind us now and the market's going to rally and blah, 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 blah. No, we're in a downtrend. We're a bear market rally. The price that proves a downtrend thesis wrong would be a break of the trend. And ask any CMT or any market technician, obviously we'd have to break above this high to break the trend definitively. I urge you to watch intelligent people on financial news that talk about charts and technicals. We're still in a downtrend, so 43. I like Carter Worth, the chart master. He's a great guy. I relate most to him of all the people on the financial news, because he's smart. He called the exact apple top, a brilliant guy. Anyway, 4,300 or slightly above 43.20, unless or until the S&P breaks 43.20, I am not going to put on any size in any long positions for swing trades, because we're still in a downtrend. So keep that in the back of your mind. That's extremely important and smart and correct, right? Ask any Wall Street person. Buying right here is beyond stupid, because that's right under resistance. Now, the price that proves that thesis wrong would be a break over the 4,100, maybe 4,120. That would be a break of the channel downtrend, but we don't aggressively go long until we get above a break in the technical downtrend, which would be at the 43.20. Now that, my friends, is why technical analysis is so valuable, because it gives you the correct decisions and very specifics about how to trade in and out of the charts. Okay, the other thing we'll look at before we pull up some of the charts here is our VIX, volatility index. What do you notice about the VIX? How long does a downtrend in the VIX last before it goes back up? Now remember, the VIX always, 100% of the time, without fail, goes back up. That's why I'm trading UVXY, even though it's still in a downtrend and took out a 52-week low yesterday. It's very, very likely to pivot any time now. So we're at a key inflection point for that instrument. The volatility index, our CBOE volatility index, at most it lasts maybe 8 weeks or so, right? We're like in week 6 here. So we may well drop down to the 1920 before a pivot. But it's much more likely to see a pivot to the long side and a drop in the stock market in the near term, in the next couple, 3 weeks, than we are continuation. So price that proves that thesis wrong would be if the VIX gets under 19. So ask any Wall Street trader, any Wall Street quantitative analyst, a quant as we call them, or CMT. The VIX is still in a downtrend, which is still bullish for the stock market, but it's very likely to pivot somewhere between here and the 19. So technically, if you're trading things like UVXY, you wouldn't want to sell it or stop out unless the VIX gets under 19. That would be a drop under support. So as long as we're still getting close to support, it's much more likely to pivot to the upside and the market to drop than it is to continue down for more than a week or two. So it goes down before it goes up, down before it goes up, down before it goes up, down before it does what? Goes back up. The volatility index always pivots 100%. The volatility index never goes down longer than 8 weeks, or at least not in the last year or two. So we're very likely to see a pivot in that. And so for that reason, I'm fond of UVXY down here because it's down at a 52-week low. It looks absolutely terrible. It always does right before the big ass run up. So don't be one of the, at least I'm not going to be one of those traders that gets shaken out. I bought some more yesterday. This thing I buy on the way down till it gets, say 40, 50 cents under the 52-week low. So 8.3 and right under 8 would be the stop levels on this instrument. So it still has a bit to go. After it drops, it always bounces. It drops, it always bounces. It drops, it will bounce again. It always does. So the one strategy is to be on the right side of that. Now, better relative strength can be found in instruments like our short NASDAQ. The SQs had really strong ups and down. Remember, this is a kind of wave type of a market where it's an up and down. It's a wave. It's up and down like a sine wave, right? You buy support, sell into resistance, buy off support. Now that's one of the things where, you got to hold your nose if something is looking terrible and it's going down. You don't add to underwater positions. You scale in once it's your initial position is in the money and you've got some unrealized P&L to work with. Then you're playing with house's money. Trigger point on SQs would be right over the 50. Stop level would be the 40. So I'd trade outside of that range. If it gets under 40, I'd sell. If it gets over the 50, I buy, right? So it's way up from 30 to 70. Then back down to 32, then back up to 70, now down to 46. It may keep dropping down to 30 and then cycle back up again. That's the most likely scenario. We're likely to get a bounce rather than a continuation sell-off. Let's take a look at some charts. We'll look at both some swing trading charts and we'll look at day trading charts momentarily. Lots of green in this earlier. A trader earlier today had mentioned DHT, which is a wonderful looking chart. I like that chart, so thanks for that. It's a really good run here from 7 to 10. So really nice, good run. Now, if you are going to swing trade long, I would be very selective and only trade the very strongest, consistent charts. Okay. Oh yeah, one thing I was going to mention too is Bitcoin, BITI. So we're going to look at that next. But anyway, of all the charts that people had asked about, that's the strongest one. A good, strong, clean, tight, continuous run up. If you're swing trading charts that don't look like this, why? Right? Trade charts that are consistent. That's very valuable. Now, how about potentially profiting from the Bitcoin sell-off? I'm curious, how many of you think the crypto still has further down to go? The contagion will spread. Bitcoin will be down at 10 before it's back up to 20. Or 14, 15, something like that. 15? No, we're at 16 now, I think. Anyway, Bitcoin is I'm just thinking ahead of time. How many do you think Bitcoin, BTC, and crypto as a general asset class is going to keep going down? Yeah, 7,000. I'm with you. I definitely believe it'll hit 7,000 before 7,000 before 20, right? Hey, Mira, how you doing? Yeah, Neville. Yeah. So how do we profit from it? Well, we can't short Bitcoin unless the handy dandy ProShares Bitcoin inverse ETF, right? I love inverse ETFs. It's how I short without actually shorting, because shorting has unlimited risk, which I don't like. But going long in inverse instruments, that I like, because you have defined risk. What's the technical pattern here? It's up and it's doing a pennant pattern, which is above previous resistance. So that's still, we're long biased this instrument. Now this is one I will swing trade. I will swing trade inverses. I am swing trading inverses. Well, I was trying to draw that line here. Anyway, we're at support off that previous support area. So the place to scale in BITI would be over each whole number, the 43, the 44, the 45, the 46. Remember I said that, please. BITI. When you buy this, you're shorting cryptocurrency, which is probably not a bad idea. I believe contagion will spread, and until there's regulatory authority in place governing crypto from the SEC or similar reputable bodies, I think the crypto asset category will be abandoned in droves by people if they can still get their money out of crypto. I never bought crypto. I always remember I told you guys I agree with Warren Buffett. I think crypto, but I'll short it because I don't think crypto has any merit. I think it's monopoly money, and obviously with all the fraud and pestilence and problems in the crypto universe, I think it's a really stupid place for people to put money. And I don't understand for the life of me why people bought crypto. It's made up monopoly money. Why would anybody? Anyway, but I'll short it in a heartbeat, right? So I'm buying BITI. I've been playing it earlier. I'm going to buy in more aggressively over the 43, 44, and especially if it gets over the 46 and then over 50, right? So BITI is an asset category that shorts crypto. We're just in the beginning stages of what may be a major contagion meltdown and abandoning all hope of crypto, and it gets down to 10, or like Ashton said, 7. It's entirely possible and probable, by the way. I agree with Ashton. I think it'll get down to 7 or 5 or 4 before it gets to 20 or something. I think crypto is doomed until it's regulated. That's my honest thought. I am confused as to why some people, one guy who I have a lot of respect for normally, I won't mention his name, but he's a billionaire, put a lot of money and apparently lost a lot of money in crypto. Anyway, I would short crypto by going long BITI. That's my official, one of the best calls I'll give you guys this year is long BITI up at new highs, with a hard stop right under what, 41. So 40, would be the maximum drop dead stop on throwing darts at BITI. Until crypto is regulated, it's going downtown, right? Because, who in their right mind would have money in a made-up asset category that has no regulation and all this rampant fraud and foolishness out there? You won't get any institutional volume. You have the retail speculators that are getting their heads handed to them. And I feel bad for people who lost money in crypto. I would never touch that. I've never bought crypto in my life, and I never will. But I'll short it with the BITI inverse ETF. So anyway, that's my bit on BITI. What else do we have here? Let's take a look at some of the intraday chart. Well, let's look at a couple others. I think my favorite large cap tech for a bounce is Facebook, even though I'm not a fan of the company, and I really hate the name Meta, which is the beyond horrible name. But if Meta gets back over the 125, that'd be a technical buy. It's on everyone's radar right now. It has to get above the previous low, right? Which on this case, the bullish engulfing earlier back on the 12th or whatever lasted a week or so, and then it just kind of drifted sideways, crapped out, starting to bounce here. I would still wait for 125, 130, somewhere above the previous gap support level. So it has to get above this level before I go long for a swing. But it came down off 300, and it's 85 was a bit oversold, obviously, and it's now up to 110 or so. So I like Meta up at new highs. Foot Locker had a pretty good run for the money too. FL was up. The retailers gapped up yesterday. Ross Stores, ROST, and GPS gapped up. Look at some of these other charts. Reasonably healthy charts with good volume and volatility. Another sector to pay attention to is the cannabis sector. It's been horrible to trade since day one for the most part, but it's finally starting to light up, and it almost doubled. It went from 230 up to 450 or so. So Canopy Growth here almost doubled off its late October lows. Definitely I'm going to be getting back in this. Mostly I've lost money trying to trade cannabis stocks. So I'm net in the minus, in the red, trading this sector. I guess I was overly enthusiastic because I live here in Colorado, and it's like a $6 billion a year industry. So it's huge, but until the government allows it to not be a Schedule 3 or whatever, until it can be going into the banks and is approved on a federal level, still likely to be a struggle. But we've got a lot of speculative long action in our cannabis sector. So oddly enough, cannabis, you can see it looks great. Over the last month, it's nearly doubled. This from 2.3 to almost 4.6. So nearly doubled in just a month, in 6 weeks, I should say. So Canopy looks good. speculative bounce maybe in Clovis Onc. It had been up in the dollar a share range. Now it went down to penny stock status. But CLVS, Clovis Oncology, I'm going to be buying this aggressively if it gets over 50 cents, because I don't know if I'll double my money, but if I can, that'd be wonderful, right? So I don't, hey, 70, 80 cents maybe maybe 80 cents would be a realistic exit target, right? But CLVS for a cheap penny stock bounce play is likely a good candidate. Another one that's been woefully sold down is Bed Bath & Beyond, former meme stock. At that rate, it looks like it may go to penny stock status or Q, no shareholder value status. But it's been going down so long, I will start to play with it if it gets over the nearest whole number 4, and then scale in over 5 and 6. So that's another play for the playbook, is consider long in the Bed Bath & Beyond if it gets a pivot. And of course, I prefer to buy strength, so I always prefer to buy strength over weakness. So things like our cannabis stocks or some of the charts that have gone up nicely, and our Bitcoin inverse makes sense as well. So that's about it for me. One thing I wanted to mention, and if you have any tickers you'd like me to pull up, go ahead and do so. I did want to mention my coaching program. A lot of people have applied for this, and I've approved maybe 85%, I want to say. Most people, I have not approved people for this program if they are, say, Forex traders, or they're brand new traders, or they're options traders only. This is for stock and ETF swing and day traders. I am taking applications right now, and the link to that's at trademastery.com/action. I've not yet made a talking head video. I don't know if I will, because I'm telling you guys, what to look for. But I've got several weeks left to get your applications in, and I do have a 100% satisfaction guarantee on this program. So it's the biggest benefit to this is I do trade reviews with you. I can get on the phone with you, or with the Zoom platform like this, and go over personal trades. And also we have personal one-on-one time on the phone, plus a whole lot of courses, and it also includes the live room access. So this is my Action Profits coaching program for 2023. And so we're now taking applications, and the program officially starts January 1st. Hey, Ned. Edibles, they have these gummies. Anyway, okay, let's see. Transocean and GOYC. Like I said, energy sector has been pulling back, right? So it's been in a good uptrend, but I think short crude is likely something to work at too, because oil stocks have been up, like Halliburton and Rig and whatnot. But now we're starting to see a bounce in the short interest in crude oil. So SCO is the immediate play. Longer term, I'm with you. I think there's still plenty of room for oil to run. So if it takes out new highs later, then both Rig and HAL would be good plays for oil. But in the short term, it looks like they're shorting crude, right? The shorts, the price of crude is going down. So I want to play SCO. Yeah, thanks, Kim. Yeah, for some reason the music wasn't working for the horn playing, so I don't know why. It kept getting overloaded. So many people here, so I had a big turnout, or have a big turnout. I'm getting a new computer next week, so that'll probably fix everything too. Anyway, great to see you guys here. Appreciate you all for taking time out, and I hope that this gives you some insights in terms of what I'm looking for. Yeah, let's take a look at some intraday here for just a sec. So I called Boyle for traders at 40.7. Did a nice little run up to 42 or so. SQs was best in the morning, right? SOXS was okay, but SQs was the better of the inverses. And I called the long for my traders at 45.20 right there. So that was our long call for SQQQ yesterday morning for our live room members for this instrument. You can see I put the exact triggers. Unlike every other room, I actually give specific entry prices for paper trading use only. But anyway, it worked out good. You can see I had winners in Boyle, Soxes, SQs, and others. So yeah, I talked about the S&P this morning. Let's see, WPM. It looks good over 37.20 or so. Let's see, gold. Gold's been volatile lately. It's trying to climb up here just a bit. If you take a look at the swing chart, yeah, it looks good. Yeah, GDX over the 28.7 would be a trigger. Yeah, not a trade recommendation, but 20 cents above the high, 28.7. If it does continue up, it finally broke out of that consolidation almost 2 weeks ago, right back on the November 8th, I think it was. We had a good update that broke the resistance with that green candle. So that put gold back on the radar for me at least. So yeah, I think gold is a play if it takes out new highs for GDX or GDXU or GLD or whatever you're trading. If we take a look at the S&P, we'd covered this earlier. My point is, we're still obviously in a technical downtrend. R1 is right at 41.20, right above that peak. So I'll start nibbling at swing trades if we get and hold over the 41.20, but we're still in a downtrend. This is a bear market. This is a stupid place to buy stocks. This is a smart place to sell stocks and short the market unless or until the market breaks the downtrend. It will not have broken the downtrend unless it gets above the previous major high, which is right near 4,300, right? So if the market breaks back over this peak, that will be an official break of the downtrend. That's the one that counts. That's the major previous peak. So right here now is a really foolish time to be swing trading the market because we're still in a downtrend. I think it's a smart time to start placing inverse bets, which have worked out so well for us, right, during the market going down this whole year. So we're still in a bear market with a bear market rally of no significance the last few weeks or so. What does that chart tell you? Is this a chart you should be buying or selling? This is a selling chart. This is not a buying chart. Unless or until it breaks the previous peak, right? We're still in a downtrend unless we break the previous high, the previous major high on the downtrend, right? Lower lows and lower highs. Until we break a lower high right here, we're still in a downtrend. If you draw the channel, it's a channeling downtrend. So this is something you want to short on you. How to say? Right here now is the worst place possible to buy. Buying right under resistance is incredibly foolish, right? Remember I said that. We're in a downtrend, despite what the talking heads say. Talking heads are paid off by Wall Street firms that try and fluff up the stock market. That has been wildly unsuccessful all year long. I won't mention the guy's name, but there's a perma bull guy who speaks on Financial News TV. He said, well, the market's got to come back up ever since January, February, and he kept saying the market's going to go up all year long. And if anybody listened to him, they would have lost a fortune. I've been calling the market short all year, and I've been correct. And thank you all for listening. I hope it helped. So I don't use MAs. Hey, Heidi, thanks. Hey, Bill, let's see. Paracamex, AFRN. Okay, let's take a look at these. A few last charts here, and then we will wrap up, friends. And I wanted to wish all the very best for Happy Thanksgiving, too. Let's see. My first question is always, is it worth trading in the first place? So let's pull this one up. No, it's a downtrending chart. Short to 15 would be again, not a trade recommendation. Let's see, KGC. That's a strong selling chart. Not enough range in it to be of interest at that price, so insufficient range. Let's see, DVB. There's always a fatal flaw in a lot of charts. There's a few charts that are worthwhile. Thin volume, chop, not enough range. Now let's see. No, I don't use Heikinshi candles, but I've heard of that. Let's see. That's going to KMX. Well, that's a terrible chart. Again, about the only good chart you guys asked about today was this one. That's a good chart, all right? Just to compare and contrast with charts that some of you may have asked about. We want charts that are going up consistently with nice ranges that have good risk reward ratio that you can potentially have made a boatload of money with, right? And I'm not interested in charts that chop around or narrow ranges or haphazard randomness. That's no good. This is the other really nice chart, EXTR. So for swing trade longs, those are like the only two that have reasonably good strength to justify going in against the market downtrend. So, but those are good, EXTR and DHT. And again, we never do what? EXTR, for example, we never buy nines. So I'd wait till it gets over 20. Here would be a good place to sell. We have a doji uncertainty candle yesterday at the 19, of course. So it's likely to pull back and go down next week. But if it gets back over 20 at some point in time, that would be a good play for EXTR. DHT, I like it anywhere, say, over the nearest whole number if it gets over 11. Wouldn't go long just yet, but if it breaks the 11, like 11.20, maybe worth a shot. So those are the kind of charts you want to focus on, or charts that you can actually do well with that are consistent. You don't want to gamble or speculate with haphazard random charts. You want charts that are likely to do well for you. So, and yeah, John, I mostly go long. Yeah, SARK is good. Short Kathy. If it takes out new highs over the 70. Big picture on the yearly chart, it's up, of course, but it's still haphazard and random here, so I wouldn't touch it unless it gets over a new high, because that's a price that'll attract new buyers, is if it gets over the 70 and holds for a couple of days, then it'll gain traction and likely run to the 80 or the 90. But for right now, it's still inside a range, so it's not strong enough just yet. See, this one's asking about EL. No, it's a minor bounce with not enough range. It's likely to chop around here. It may go to 250 before chopping around, so I wouldn't, personally, I don't like it. Let's see, Flex. We're gonna wrap up here in just a minute, friends. That one's actually okay. I like the strength. It's got some pep to its step, and it broke the 20, even with the shooting star. If it breaks, say, the 2070 or 21, I like that one actually. That's not bad. Flex is okay because it's got a story of relative strength for the whole last 6 weeks, so it's a pretty good play. But still, that's easier, right? That's easier. The narrower and tighter, instead of wide range, the narrow and tighter like a piece of string in a 45-degree angle, the chart is, the stronger it is. So anyway, that's good stuff. All right. Well, I'll see you good friends, or good folks, I should say, and friends, some of you next week. I wanted to wish you all the very best for a happy Thanksgiving. I do want to encourage you to, I do have satisfaction guarantee on my coaching program. I believe in it. It's you get a lot of access to me, and I'll go over your trades with you. We do a lot of trade reviews and a lot of stuff for our coaching program. First one I've offered in I think just over 5 years, maybe 5.5 years. So it's been a long time. Get your application in. We've only got a few weeks left on those. And happy Turkey Day to you guys. Yeah, thanks, Kim. Appreciate it. Hey, John. Hey, John, yeah, if you have any questions, just send me click on the support tab. If you guys ever have any questions about anything, it's Zendesk. Just click on the support tab and type in your question in your email, and I'll get right back to you. So happy Thanksgiving. Oh, yeah, saxophone last. Nice, thanks. I'll try, but I don't know what happened. It's...